Good day, everyone, and thank you for joining me for this short recording on question 9.4. In the required part for question 9.4, they first of all ask us to enter the information of numbers 2 and 3 below in the General Journal of Mashika Shabin on the 30th of March 20.4, and then in the B part, correct the trading account in the General Ledger of Mashika Shabin for the year ended 31st of March 20.4, taking into consideration all the information. So we're clearly busy with the closing process, and we have to do a general journal and a correct trading account. Once you read the required part, I want you to draw up a framework for your answer. So you would need a general journal for numbers 2 and 3, and then a quick drawing of a general ledger account, and we're going to provide some heading so that we just know what we are looking for, and we can earn the marks as we read through the given information. In the information provided, they tell us that Mr. Mashika appointed his son Sipu, a first-year accounting student, as the accountant in the family business, Mashika Shabin. As his son did not pass the course, which will not be the case for all of us, Mr. Mashika asks you to determine whether Sipu has done the closing off of the accounts and the calculation of the gross profit correctly. Remember, we calculate the gross profit in the trading account. That's the reason why we draw up a trading account. This was prepared by Sipu on the 31st of March 20.4, the financial year end, and it looks like follows. So they give us an incorrect trading account, and we're going to use this incorrect trading account to prepare or start the preparation of the correct trading account. In the additional information, I'm not going to go through all of these items because we're going to earn the marks as we read. But let's just have a look at number 2 and number 3, which we have to do a general journal entry for. In number 2, they tell us Mr. Mashika donated inventory with a selling price of 500 Rand to a local old age home during January 20.4. They use a gross profit percentage of 20% on the selling price. Okay, so if we work with our cost, profit, selling price, 9 blocks, if they tell me that the profit markup is on selling price, then the selling price will be 100, the profit 20, so the cost will be 80% if we want to manipulate amounts to calculate either the profit or the cost in this case. Sipu did not record this transaction. So a donation of inventory, remember, donations will decrease the inventory. So I want to credit the inventory account, but I'm not allowed to keep track of inventory in the inventory account if this is the periodic inventory system. So I will have to credit another account, and the account that I'm going to credit will be the purchases account. But the purchases does not include any amounts at selling price. So I will have to use that 500 Rand selling price and convert that to a cost. So if we remember our formula, it's what we want. So it would be 80 divided by what we have, which will be 100 times my 500 Rand. And that will give me a cost for the donated inventory of 400 Rand. Let's do our general journal. I've got a credit in the purchases account because I'm decreasing the available inventory for sale because I donated it. And I'm going to debit donations, but you can see that we're working with a cost and not a selling price. In number 3, they tell us that the purchases returns of 4010 and sales returns of 3950, both of the returns accounts were not closed off, as Sipu thought it should be shown separately in the statement of profit or loss and other comprehensive income. In the statement of profit or loss, we're going to show our net sales and net purchases. So I would have to take the sales returns of 3950, which is an expense account, and close it off. So how do I get rid of a debit? I will have to credit the sales returns, corresponding debit in the sales account. So I'm transferring my returns to my sales. I kept track of it separately because if this amount for sales returns, if the 3950 becomes or reaches a level that is not acceptable by the entity, I will have to have a look at the reasons why my debtors are returning items. It might be a problem with the quality, which I can take up with my supplier. It might be a problem with my credit policy, so I grant them credit too easily and they return it after wearing it for a day, for instance. The same for purchases returns. Purchases returns would have entries on the credit side. So to get rid of or to close off a credit, I will have to debit the returns account with the corresponding credit in my purchases. Now we can have a look at the B part, and we're going to start off with our incorrect trading account prepared by the Sun. Now, in a trading account, we're trying to calculate the gross profit. And gross profit is calculated by taking sales and deducting cost of sales. Now, in this case, we do have a sales account, but the sales account was entered on the debit side. Remember, gross profit is equity item, so equity will increase on the credit side and decrease on the debit side. So the sales will have to be transferred over to the credit side because it increases the gross profit. Then on the debit side, I want to deduct cost of sales, but I do not have a cost of sales account. So I will have to do a calculation of cost of sales, and a calculation of cost of sales starts off with the opening inventory. I don't even have inventory at the start of the financial period in this example. So that will be my first missing item on the debit side. I add to that the purchases. They have purchases, but it is entered on the wrong side. So the purchases will have to move to the debit side. I add to that to get to cost of sales, other expenses, which I don't see here. And then I deduct from that the closing inventory, which they have, and at least it's on the right side. I then calculate the gross profit, and they've got a calculation of gross profit here, but gross profit will be a balancing amount on the debit side. So we will draw up a framework of our trading account, and can you see I moved the sales to the credit side. There I have my sales transferred to the credit side. I transferred the calculation of cost of sales to the debit side, but I was missing out on the inventory at the start, the opening inventory. I transferred the purchases over to the debit side. I leave space for any expenses incurred. And then I deduct from that the closing inventory, which was actually on the right side, and I have the amount already, 48,900. The reason why I do not include the sales and the purchases amounts, because these amounts can change with the additional information. Okay, the gross profit will obviously change because I've transferred amounts to the correct sides and there might be adjustments to these amounts. So now we've got a trading account with all the information that was included in the incorrect trading account, and I've transferred them to the right side. We're now going to take a look at each of the adjusting entries, and we're going to include them in the trading account. Good. So in number 1, they tell us freight on sales of 1,200 and freight on purchases of 430 were omitted from the books. So this is transfer fees either from the supplier to your premises, so that would be from purchases, to your premises, or then from your premises to the client, which would be the freight on sales. Now, which one of these two is essential for this trading transaction to take place? I will have to transfer the goods from the supplier to my premises, because if it's not at my premises, I can't sell the items. So this 430 Rand is essential for the trading to take place. Is this 1,200 essential for trading? No, it's not, because some people might come and pick up. Some people actually only shop in a store, so they would be there to take the sales with them. So even though this is an expense that we incur, it will not be closed off to the trading account. Freight on sales will be closed off to the profit or loss account. So the only item that we will have to add in the trading account at this point is the freight on purchases. And remember, we left a space here because this forms part of my calculation of cost of sales, because this is an expense to get the inventory to a condition or location ready for sale. Additional information number 2, we've already done the calculations, and we realized in the journal entry that we're going to deduct the cost of 400 Rand from the purchases account. So in my trading account, I don't know the correct amount for purchases yet, but I do know that I need to deduct the cost of the donation. Can you see that we're earning marks as we read through the additional information? Number 3, we've also done the journal entry. So we know that we deduct the returns from purchases and the sales returns from sales. So in my trading account, in the brackets, I show them that I need to deduct the returns. Remember, I've already deducted the donation. So I'm going to include the closing transfers of the returns in both sales and purchases. Number 4, they give us the inventory on hand at the start of the period, 1st of April, and then they give us a stock taking done at the end of the period, revealing 48,900. So I can include my opening and my closing inventory. I can include both of them in my trading account. So at this point, we've already passed the question because we're earning marks as we read through the given information. In number 5, they give us the sales. So they give us cash and credit sales. Remember, according to the accrual concept, we want the income earned regardless of whether we've received it or not. So both of these amounts will be entered as sales on the credit side of my trading account. So I've got my credit sales plus my cash sales minus the returns that I've already put in the brackets. So I've finalized the sales value. For the purchases, I again have cash and credit purchases. Accrual concept. Regardless of whether I've paid it or not, I'm going to include the purchases on the debit side. So there I have my cash plus credit purchases. I've deducted from that the returns, and I've deducted from that the donation at cost. Let's quickly check. I've got my sales amount as an increase on the credit side, so I'm happy with that. For cost of sales, I need the opening inventory, which I've included, plus the purchases, which I can now calculate, plus the freight on purchases, which is an expense. Remember, freight on sales will not be in the trading account. It will be closed off to profit and loss. And then from these items, opening inventory plus purchases plus freight on purchases, I will deduct the closing inventory. So that's why it's on the opposing side, closing inventory. And now I can calculate my profit or loss. This was clearly the periodic inventory system, because remember our clue, if we have a purchases account, that means that we're applying periodic. We do not keep track of inventory in the inventory account and we did not have a cost of sales account. So I can calculate my gross profit, and gross profit will be the starting point of my profit or loss account. So this 25,050 is my balancing amount in my trading account, and you do not plan on making a gross loss. So the profit or loss balancing amount will end up on the debit side of the trading account so that it can go to the credit side of equity. So I'm going to start off my profit or loss account with the gross profit of 25,050. I trust that you found this informative. Please join us again for other explanations.